Okay, January 27, 2014. Well, today after the market closed, Apple came out with the earning and got clobbered once again. Remember the post that I put up on the weekend, talk about Apple's earning. And we talk about some of the put spread and the call spread, right? And one of the spread that I put on was the 510 500 put. And right now you could see that the after hour price actually went down to 500 and change and then come back up. Right now, I have it on my data feed is 506. I think some of them are sitting at 509. So whatever it is, and on that weekly, we probably would see this thing gonna be close somewhere around 510. Let me explain why I believe that it might be pinned at 510 or it might not, and it might be we might see a bounce off of Apple here. Just purely on the technical analysis first. So we'll just take a look at some of the technical and see how we can make an assessment of the possibility of getting an Apple bounce off of here on the earning. Now I know a lot of people is kind of disgusted with Apple, the way that it's getting just play around, but that's the way it is. The market will frustrate the heck out of you, and until you capitulate, then it will go and do what you want it to do. So I know there were a lot of people buying the call, and let me just put up the option page here, right? And we just look at some of the call volume here, and I believe on the 600 and that kind of stuff. You see all these right here. Look at these guys, right? Right. 12,000, 11, this is 12,000, 14,000. These are 550, 555, 560, okay? And you got the 565 here, we got 6,000. But look at the open interest, right? 11,000 here. And let me scroll down. We just take a look at some of these volume here. So it kind of give you some idea when you look at some of the open interest. It kind of reviews. Sometimes it's pretty revealing. You see here, high volume, 12,000 contract traded, and coming in today with 6,000 over 6,000 open interest. Same here with the 570, okay, right? The 570, 10,000. So you can see that $30, plus or minus 30, that the option market was pricing for it to move based on earning, and it was sitting at 550, right? So and I think last week it was sitting at 540 something. So even at 550, you get a 580, 570, that marker here, right? And that's why you see a lot of these volume and open interest here, and then you see that there's even people coming in on the 600, right? If we come down here, you see the 600 volume on the 600 here, right? Although the open interest coming in is only 5,000, but you also see the 590, right? So obviously there is a lot of call buying, and of course, somebody had to be selling these call, right? Either the market makers. And most of these things, when you play earning, you don't want to play directional option. You want to play the spread because of volatility. You want to go take out some of the IV, the implied volatility. So basically, you kind of trying to minimize that effect is basically by playing the spread, and that's why you want to play the spread here. And the professional money, the smart money will play the spread, and most likely, they basically is like if they are playing some sort of iron condor, is to sell the call and the put spread, right? Just and then just let it go. So right now we're saying that it's basically just too many call buying, right? And if you look at some of these open interests, it's basically a lot of these is basically being sold as a spread. That's what I would do if I were going to do this and play Apple on the option. I would be selling these. Basically, if I'm looking at the range of the imply of movement on the prices plus or minus $30, and if Apple is sitting at 550, so I figured that hey, if it's going to the upside, then most likely it's going to hit that 580. Then what I would do is I'm going to sell out of that range. So if it's 590, what is the chance that it's going to go to 590, right? If the market is pricing 580, sure, there's a possibility that it could, but most likely it won't. Right? So basically, you basically playing, based on probability. So what you want to do is you want to write the call spread 590, 600, right? So that's what you want to do, and then get that credit spread, and just get that credit, and you hope that the Apple will expire, 590 or below. then basically you just capture the full. And then when you write the put spread, let's say we go to the put spread, and I'm basically saying there's a 500 510 put spread, right? So then you go and capture that particular credit. So you basically want to sell that particular put spread, and you can see, there was a lot of volume down here. This 500, right? You see this, right? The 500, okay, and even at the 510, right? So you can see that there's, the 520, there's some 520 here. So essentially, if you are looking at 550 and it's go down $30, that means you're looking at the price to drop to 520. So you don't anticipate it to go below 520 or 510. So basically what you want to do is you want to write the put spread, sell the put spread, away from that range, which is, the most logical, the next logical level is at 510, 500, right? So basically that's what you want to do. So let's say we see that most of the professional money, the smart money, or the market makers selling that 510, 500 put spread. Certainly they don't want the stock price to go down to 500. Then all of a sudden, for them to buy back the spread, then that means they have to pay that, the 510, 550, I mean 500, the difference in that strike is $10. So what they're going to do is they're going to move that stock back up to 510, right? So if they could close it, ideally, pin it at 510, then that means they could expire worthless. They capture the 500, that's going to be worthless, and the 510 sitting right at the money is going to be worthless, right? So what they're going to do is they probably will bring it back up to 510, maybe during the midweek, so they could close out these spread, or they could just suck some more people in on these put, and then on Friday, this weekly option that come and pin, they might pin it at 510, right? So keep an eye on that, right? So watch the open interest on these options. So let's go back to the chart and take a look at Apple. Not we not every one of us trade options, so I'm just kind of explaining, some of the game. It is a game, people. Don't think about fundamental and that kind of stuff. It's a big game here, all right? Okay, if you think about investing, you shouldn't be watching this video, okay? Because it makes no sense to you. Right? It just get you frustrated if you watch these, okay? To see these kind of game, possibility of gamemanship that they play, okay? So let's go and look at Apple. The technical is not good. Right, you see that it broke this trend line here, right? This is the after-hour markets price. So you figure I do have a little Fibonacci here. You see this trend line here. This trend line is kind of got broken, right? This trend line that we're looking at for support for quite a while, and finally, if it doesn't get back above that 540, 550 level tomorrow, then essentially, we're gonna take this trend line off the chart here, and we'd be looking at these kind of stuff here. So if I take these trend line out, and essentially, looking at this Fibonacci retracement, you can see that there is this, 618 retracement right here, which is near this 500 level. Okay, so maybe we get a little bounce here. So we got a little bit of a confluence, come down to this 500 and with a bounce, right? And so that's one of the things that we could look at. And then there's the other one. If we take a look at this particular Fibonacci retracement, let me take this out, and we draw a new Fibonacci retracement using this particular swing here. Okay, then we see that also it come down to this 382 extension, right? So it could be bouncing off of this particular swing. So there's a little point of confluence here between this 500 and 506, and also you see that there is a some sort of a support and resistance line here, right? So oops, let me take this out. Let me get my line draw to here so we could draw some trend line here. All right, so if we take a look at here, so essentially you do see some sort of a confluence where we might find some sort of a support here that could give us a bounce. And that kind of give us a little bit of a credence to say, hey, if Apple bounced back up to that 510, 512, or even 515, then a lot of these guys that wrote these put spread, option, they could just go and buy it back cheaply and then just close it up because they already, if these guys are setting up iron condor, they already got the call side, right? they got those money right now. They're going to collect, or at least they don't have to, lose any money on the put, right? The put spread. I mean, they could just collect a little bit or even break even, but they certainly don't want to pay $10 when they come down and close and pin it at 500. Then they have to pay that $10. The difference in strike, right? So there's a little bit of things to kind of keep an eye on. I'm not saying that Apple is going to do what I said they're going to do, but it's one possibility, right? One scenario. Keep an eye on it, right? So it might be a buying opportunity instead of a lot of people to say, yeah, this thing is going down to 385 and going to go to 300 and 250. Watch, you're going to hear a lot of these people just grab something behind their you know what and say that, hey, Apple is going to do this price and all this kind of stuff. So that's the scenario. Good luck.